Trading Market Technicals morning call video for Wednesday, July 17th. We did get a little bit of red across the board, and that was in fact due to the CPI number that came in hotter than expected. I mentioned in yesterday's morning call video, I said keep an eye out for that, because if that does come in hot, Ben Bernanke is going to probably flip-flop his more dovish tone back to the original less dovish tone way back about 8-9 weeks ago, when the original sell-off started in May. We had that 3-4 day blip, and then the markets obviously rallied for 13 days thereafter. So keep an eye on that. He has testimony begins today in front of the Federal House Financial Service Committee starting at 10 o'clock today. Then he does it again tomorrow. So I think all eyes will be on the Fed, and I think the trading will be pretty much light and subdued, aside from companies that are reporting. Like we had Yahoo last night, came out after the bell. They beat top, missed bottom line. And then all of a sudden, I noticed at the end of the post-market session that it recovered most of all of its losses. Bank of America, eBay, IBM, Intel, and American Express reports today. So keep an eye on that. Make sure you're following your companies that you're trading. You don't want to be holding into earnings. It's a crapshoot, 50-50 crapshoot. Last thing you want is, come in the markets and then you're down $2-3 on a stock that you forgot to check. So just a quick reminder, please check that. Now, interesting developments aside from the CPI. We did have some of the banks report, like Goldman reported yesterday. It was up about $2 and then clearly reversed all of its gains. I'll show that to you in the charts as well. A couple things as far as econ data. We have housing starts come out for June at 8:30 a.m. We also have, as you know, Ben Bernanke testifying this morning at 10. Weekly crude inventories come in at 10:30, and then we have the Fed Beige Book comes out at 2. That's also going to be important too. So just keep an eye on that. We have a chock full of econ data coming out. So we have to steer through this today, if at all, if there's any kind of action at all going on. But these are the top watches I'm going to be looking at, is the earnings, the big guys that are reporting today, to see if we can get a trade off in that sector. Okay, quick numbers. Dow down 32, NASDAQ down 9, S&P down 6, Russell down 4.5. Now, we have a couple of things. We have the S&P and the Diamonds, which would be the ETF for the Dow Jones, making double tops. And as you know, the Russell clearly took out its highs. XLF did the same as well, the banking, bank ETF. And then, of course, we have the transports kind of lagging. So we have a little bit of a mixed bag. So what I like to do is kind of look at what's the overall big picture. And in front of you, you'll see the VEU, which is the Vanguard All World Index, okay? And that's interesting to see where we are. So we're making new highs in the U.S. Let's see what the other markets are doing. Well, they're not, right? We did get the move from the lows. We did get the gap up, but we're not making new highs. We're clearly far away from that. So it's something interesting to say. Not, nothing that we're going to really. This is more for the longer term investor. The swing guy that's 1 to 3 days, or the day trader, really has no effect to that. But you still want to know what the big picture is, regardless. So I look at this and I'm like, okay, well, all the other markets are not following suit. So that's something that causes me to have a little bit of a red flag. Again, but I'm more of a day trader. If I do hold positions, it'll have to be the right time, and that'll be for a 1 to 2 day hold, 3 day hold, or whatever, how the position dictates. So here's the VEU, and again, guys, so we're a little bit lacking in what's going on around the world, right? We have we're actually rallying where the other markets are rallying, but not as high, not taking out all-time highs. So something interesting to keep an eye on. Okay, so let's take a look at the bonds, and this is right now is a weekly chart, so we're only 2 days into trading, but holding nicely in the 200 week, moving average. So we're holding there, but eventually I do think that breaks. Probably get a little bit of a bear flag type move into the 8, and then I think ultimately bonds do get crushed. Now, again, I mentioned a couple weeks ago, it all depends how, if the rotation out of bonds and they put money into the market and it's orderly, then it's fine. But if bonds really start to get hurt here, then I think you're going to get liquidation even in equities, because they have to take what's good and pay for what's bad. So you got to just keep that in mind as well. Okay, take a look at the euro. Euro, I mentioned yesterday about the dollar. I said, hey, look at the dollar. The dollar could move lower below certain areas, and sure enough, it did yesterday. I don't have one here because it's just no reason to show it. But I wanted to show you euro, how it broke back above this confluence area of resistance. So again, that's why I always say we need a trigger, right? And that trigger has not happened yet. So maybe we get a double top up in this 134 area or 133-ish, that we fill this little gap here, and then we fail. So I'm going to keep an eye on the euro. I think ultimately the euro goes lower and does break this neckline. So this is definitely one in the cards that I'm going to be looking to short, would be the euro, and look to buy dollar strength. So if that happens, you're going to have equities and commodities sell off, and the euro sell off as well, as pushing the dollar much higher. Okay, so let's just keep an eye on that. Speaking of bonds, just take a look at the 10-year yield. I think that the interest rates are over. The low interest rates as far as the 10-year, I think you're going to get a creep up in mortgage rates and credit cards and what have you. I think that the longer term picture, interest rates have bottomed, and I think that you're going to see higher interest rates from here. Now, I'm not saying it's going to be 8, 9, 10, 12% like in the 80s, but I do think that it will be continually creeping up. And I've been saying this here when we broke at 2.16. This was going back in early May. I said, guys, if you're looking to refinance, do it now. And sure enough, now we're at 2.55%. Still very relatively low. But again, I think that you're going to see rates come back up, well up into this area here, and 3.5%. And then you'd need to reevaluate it. But again, the longer term picture, I think yields have bottomed. So that's something really to keep an eye on. Take a look at the VIX. VIX did get a nice big up candle yesterday. We did get that move lower from the hot CPI. But again, it needs a lot of work to do. I would have loved to see the VIX just really capitulate lower, get outside that Bollinger Band, come back in, and that would really give us a good buy signal. But again, anything could happen in the next couple of days because Ben Bernanke will hold the market hostage again. So I think the guy's a madman, and I think that to flip-flop his statement from being dovish to less dovish, it's just totally crazy within 6 weeks. What possibly could he have seen? It's just really that's what I mean by the congressmen and the senators. They need to really take a step back and really think before they speak, because they really move the markets, and it hurts a lot of people. It hurts the retail guy, and it doesn't matter. It's just it's not really to flip flop like that is absolutely crazy. But nonetheless, as far as the VIX is concerned, we are still very subdued here. No volatility, as you can see. And even yesterday, we had a small little reversal yesterday. We were down as far as like 65 points in the Dow, and market captured half of its losses. Again, buys and dips are still in full force. And again, if you have Ben Bernanke continually looking to put money into the market, that's what the crowd mentality is doing, and they're just pushing equities higher and higher and higher, and that's what's going to continue to happen until something really gives here. Okay, so let's take a look at what we have here. We get the Spiders Daily double top formation. Do we break out to new highs? Well, that's going to really be decided on what the Fed's going to say in the next couple of days, guys. And I think it's going to be pretty much subdued until then. I think trading the markets itself, you got to look for volatility in individual stocks the next couple of days. I think the markets itself will be kind of quiet until what they're saying. Now, again, all eyes will be on the Fed, and when you have these him testifying, you're going to listen to him speak, and markets are going to be gyrating back and forth based on his every word. So remember, just keep that in mind when you're trading. Okay, take a look at diamond, same thing, double top. Okay, these are the two sectors that we followed that did not make new highs. Okay, take a look at transports, as well as the transports. I'm sorry, transports didn't do that. Did not take out new highs as well, but we're right in here. And 117.44 would really be the double top area, but just wanted to show you where we are right now. Still back testing this long-term uptrend line from the November lows. And IWMs did take out the high back in May, and now we're just in this uptrend channel here. Clean and orderly uptrend channel. So again, guys, nothing wrong with this at all. Yes, we are extended, we are overbought, low volume, but again, price is king, and that's what pays us. So let's just keep following what the trend is. And again, Goldman Sachs, as I mentioned here, you notice that Goldman went higher, 2 points, and then clearly reversed, filled this void here, this little gap area of support at the time. Now it is support. So we are here, and interesting to see what happens here, because this is definitely a bearish signal. This is definitely not something that you want to see if you're long Goldman Sachs. So maybe we get a little bit of an orderly pullback, but look at the volume here, was bigger than anticipated. So this is something that we're going to need to see. If we can get down to this area and hold, then Goldman may be a buy in this area here, 155, 158-ish. And XLF did take out the highs, as you can see, and then we're just kind of hovering right above here. So I think the banks will obviously be affected on what Ben Bernanke says, and basically the rest of the market itself. Apple. Okay, so Apple doing much better than anticipated, and we are here with this double bottom here at the 380-ish area, and it held. So now we're sandwiched between the 50 and the 20, and we do have this horizontal trend line support, which coincides nicely with the 20-day. If Apple breaks above 435, which would be the 50-day, and can hold, I think you're going to get a big test of the 470. Now, Apple is looking much, much better. Now, again, nothing really comes out until the end of the summer. However, Apple does report next week. So, if Apple could say something or really trigger some sort of buying, then I think Apple may be done going down, and I think that you may be able to start accumulating this much higher. Again, I think Apple's down about 40% from the high from last September. But again, guys, got to be very, very cautious here and be nimble on what you're going to do. I would not be looking to hold any positions going into what the Apple earnings announcement will be. But again, that may be the deciding factor if Apple really heads lower or if Apple starts to break out higher. So keep that in mind, okay? People want to buy Apple, unfortunately. Fortunately, they want to buy Apple, but we want to really do it in the right frame of mind too as well. So Apple here, a break above the 435 area for a trade going into next week would be a good spot for a 470 test. Okay, a break below the 20, I think you test the lows again. Okay, and lastly is the Qs. As you can see here, Qs did break out and took out the all-time highs here back from May as well. Okay, guys, interesting developments. We had a hotter CPI. We have chock full of econ data today, so please be aware of that. Also be aware of what you're trading for, or if you're holding anything going to the next day, make sure you don't have earnings. Remember, Bank of America, eBay, IBM, Intel, and American Express report today, so it should be an interesting day to say the least. Have a great day. Be safe out there. Use your stops, and we will speak to you tomorrow. Take care.